I believe that there's a common problem most people face when thinking about leveling up. They go through life as workers. Before I created this framework, I was always thinking about my next purchase or my next experience. Everything I was doing kept me trapped in the worker mindset. I was a consumer of my time and money. I was trading limited resources without building towards financial freedom or life fulfillment. Even though I was a high income earner, I was in the trap of consumption. The expenses, activities, the habits all felt necessary, but did nothing to move the needle. So Derek, what is the correct way to think? Here's the thing that can make you unstoppable. You need to make money with systems, not with your time. You can't hope. You can't bank on somebody else's story or somebody else's money-making thing to make you rich. Wealth doesn't happen like that. To live the desired lifestyle that I was looking for, I needed to find the opportunities that suited my personal story. It would take a quantum leap, a change in attitude, and there was only one way. I had to discover a new framework, something I could get excited about. Before we get into the meat of this video and the worker to investor frameworks and strategies, I wanted to thank you for your time and attention. I do not take it lightly, and I will do my absolute best to keep it and earn more of it. My name is Derek Munchow. I'm the founder of Augustus Wealth, and more importantly, I'm my client's wealth advisor. If there's anything today that you see on this video that piques your interest, be sure to reach out, and I'll be looking forward to connecting with you in the future. So what I'm about to tell you, I know you've already heard. None of this is new. I know you're smart. I know you've heard tons of tips from the so-called experts who say the obvious, but this video is not that. It goes much deeper. And my objective is to strip away all the BS and all the fluff. Ultimately, I want to challenge your thinking and beliefs on what it means to be free. Everyone wants to be financially free, but if it was easy, everyone would be able to do it. So I'm excited to share this with you because the upcoming chapters are going to be a raw, behind-the-scenes look where I'll give you 100% access to what it took for me to level up my freedom. And to make this as clear as possible, we're going to reverse engineer the entire process together, including the new framework I discovered to break me free of the worker. Today, I'm going to take you on a journey, and we're going to go back in time. So 7 years ago, when I hit rock bottom in Hawaii on our baby moon, I was desperate. You see, I faced a brutally honest truth back in 2018. I was a planner for almost 2 decades, and I was doing it all wrong. That experience drove me to a point of disgust. I had no choice but to become an investigative reporter. I had to find out why some high earners in any job or profession got a lot wealthier than all the others. I studied the patterns of my top clients who leveled up. What did they share in common to get them to the point of wealth? Self-made. They were the ones that created it. So I revisited thousands of past meetings, poured over notes, recommendations, and arrived at the unique skill sets and behaviors shared by the wealthiest families and individuals I knew. I had those types of resources. And throughout my hard work, I narrowed it down to the one thing, the single most differentiating factor in the end that leveled people up. The A players just didn't work harder or climb higher. It was based on a winning strategy, not on a traditional financial plan. You see, this is what happened to me. The most fundamental truth hit me during that process. In the pursuit of building meaningful wealth, the most successful people relied on a strategy, not a plan. And here was the kicker. In the world of wealth management, a plan has absolutely nothing to do with the strategy. Let me explain. This is important. You see, here's the hidden truth about planning. As a high income earner, you can't rely on a plan to build wealth. And sadly, for so many years, I was playing the wrong game. I was a planner. Planning failed to level me up because I was 100% in control. If I decided if I wanted to buy the car, when I wanted to purchase the home, or when I wanted to start the business, as a high income earner, I not only controlled the actual thing if it happened or not, but I could also afford everything that was in the plan. I was 100% on track unless I created more spending. So that's exactly what I did back in 2018. The Range Rover or the Kia, 5-star, 3-star, business class, economy, it didn't matter. The more money I made, the easier it became to feel in control of my financial plan because the primary driver of the plan was spending. Just hear me out on this. This is exactly why I was in a trap and kept repeating the 4th grade. Planning is comfortable because it's linear. Just put the spending down on a goal timeline and project it out out for 20, 30, 40 years. If you got it covered, great. If not, make quick, easy assumptions to fix the thing. That's it. That's what I did for 2 decades, and that's why I was in the trap. The battle I was never gonna win with planning was the consumption. My paycheck mindset and spending were eating me alive because the primary driver in a financial plan was the spending. Now, the irony of all this is that most advisors and their clients spend enormous amounts of time and energy coming up with these elaborate plans because they make you feel good and in control, right? Thumbs up. You're doing well. You're on track. Keep spending that money. Even if they don't help you ladder up, it's the freedom part and the control part that everybody are fixated on. But how are you going to get there is not through a consumption, paycheck, spending mindset. These plans give planners the control and the truckloads of information they can pass on to their clients. But regardless, the information alone will not change your decision making. You've seen a doctor that smokes, a dentist with bad teeth, and a broke financial advisor. I know you have. You don't think they had the information. You don't think I had the information back in 2018. I did. This, my friends, is a financial plan. Look at this thing. Pages and pages of information on planning. All the activities, the definitions, the jargon, it's all in here. I can have a simple plan, a one-page plan, and it still won't change my decision-making or mindset. I could read this thing front to back 100 times and it won't do anything. The problem with it is that it doesn't stick. I can't take it with me. And back in 2018, I failed to ask the question, was there a better way? And there is. Just one other drawback I want to mention, if that's not enough, because I pretty much just torpedoed financial plans. These plans turn out to be useless because no plan survives contact with the enemy. Life happens and changes will occur 100% of the time. Predictable jobs and careers are dead. So is a nice fat pension that pays you 80% of your income when you retire. Those days are over for most people in the private sector. Today's professionals are constantly evolving and must keep up. Full disclosure, I'm not saying that all planning is bad, but as for the plans themselves, these guys, these things, and they're like digital now, so it's not like this plan, and I hope you like my label here. They just don't work in real life. In the next chapter, we're gonna dive into where strategy began for me. I'm so excited about this one because it was my big epiphany, and I can almost guarantee you it's not what you're thinking, so let's go. Let's say you want to lose weight. So how do you choose to think about it? What are your inputs and your outputs if your big game was to lose weight? The pursuit of financial freedom is no different. Freedom is what you want, but the inputs and the outputs are not concrete. Losing weight is. So let's say this is a must-win game, you got to lose the weight, but you decide to only focus on the outputs, losing the 10, 20, 30, 50, 100 pounds. Most people who want to level up their freedom fall into this trap. They put all their attention on the reaction, the dream outcomes like live free, live FI, the feel-good fluff, but it doesn't have any sort of impact because the success has to be based on something. The actions for losing weight are clear, so the player can play the game. They can play it, but not without the influence of their personal story. Here's the reality. It's why meal plans are free, gym memberships are $10 a month, and why people spend thousands of dollars on pills and lipo. Because you're guaranteed to lose the weight. Dream outcome, it's fast, and you skip the effort and sacrifice. Pop a pill versus wake up at 5 a.m. Strict diets versus no diets. So you avoid the pain, the effort and sacrifice, and you achieve the dream outcome with a high probability of success. Nobody wants the gym membership. Nobody wants to work hard. They want the financial freedom. Understand that people live in loop behaviors. You have inputs and you have outputs. So to get what I wanted required a reprogramming of my thinking, beliefs, and attitude surrounding the game I was trying to win. Because my pre-programming up to that point was not serving me in a way that I could win. I was falling short of my potential, so I cycled through those tough questions, asking myself repeatedly, what are the actions I have to input to level up to freedom? So if I was chasing freedom, then I was in search of a system that could build wealth without requiring my time. But what was going to give me the ability to do that? Two things. Number one, the strategy. A strategy that could place me on a playing field in a way that I could win. And number two, the actions, the inputs that gave me the highest probability of producing the output I was looking for. But before I could go any further, I had to get this next part right. Someone else's thing might not be my thing. Many of us think It's the money-making thing that makes us level up, and we kick ourselves for missing out on the latest trends. The AI stock I should have been buying, the iPhone app I should have been developing, the property flipping game I should have been dominating. It all looks simple when we see the success of other people. But the reality is, they haven't found the thing. They've found their thing. Michael Air Jordan. I know you've heard of him. He is the best to ever do it.
To compete, to win, that's all I live for. Really.
So good. He's the best ever. Oof. Just, okay, that's enough. I mean, we get the point. But I'm not talking about that Michael. I'm talking about this Michael. The one that had a 202 batting average, so 2 in every 10 at-bats he got a hit, 3 home runs in 127 games, 30 stolen bases in 127 games, struck out 114 times in 127 games. Not too shabby for the major leagues, but Michael Jordan played in the minor leagues. Same player, different game, different playing field, much different result. What does Michael Jordan's empire look like playing the game of baseball? Here's the deal on the so-called money-making things and the outputs of other people's stories that so many of us get fixated on. The guy who trades stock was happy riding through the ups and downs for a long time before they had their big payoff. The girl who made millions selling toilet paper on an iPhone app spent thousands of hours geeking out on app development years before the pandemic hit. And the couple who just made a fortune flipping real estate loved sourcing deals years before they got rich doing it. What we miss altogether is that the connection between their personal story and their success isn't just powerful, it's crucial. Luckily for Michael Jordan, he put down the bat and picked up the basketball and got back to playing his game. He went on to win 3 more NBA championships, 3 more finals MVPs, and 2 more regular season MVPs. So what the secret is not, playing a game not suited to your personal story. You see, leveling up starts with how you choose to think, identifying the patterns of the wealth building game and aligning them with your personal story. So if I was authentic and took 100% ownership of my big game, then the lies and false hope would stop because I already had a story. I already had a set of valuable skills and talents. I was ready to create value. Now is the time to learn how to crystallize my story into a wealth building system. So you want to be financially free, but you're struggling to level up. Well, listen, it took me 15 years advising some of the most talented professionals at today's leading companies, riding the ups and downs to fully understand what I shared with you in chapters 1 and 2. Then it took another 5 years to actually build the thing. And then in the last 3 years, I got the proof. And today I'm diving into a topic I haven't been so public about. Because here's what I see all the time. High-earning professionals who look wealthy on paper, but are still working for a paycheck. They're not leveling up. They're falling back to the quality of their system. So hear me out on this. Just bear with me because I know you've heard this before. All of this has to do with our sense of control. But control only happens when you have and use proper tools and systems. This framework shows you how to regain control in the face of radical uncertainty because the quality of your decision making is directly impacted by the clarity of your vision. Your belief that you can influence your future because the uncertainty is not going away. My framework is designed to help you create this freedom. And at its core, it will guide you to rethink your thinking and beliefs about freedom. And that's my purpose for being here. So what is the battle as a level 1 worker? The battle is you have to make more or spend less. Ideally, you want to make more, right? That's ideally what you want to do. But the reality is if I asked you, what does your income look like over the next 1 to 3 to 5 years? It's probably going to be something along the lines of, it's fairly linear with my income. Unless you're climbing the corporate ladder or you jump into some other position that is going to pay you X amount more, you can't bank on money that hasn't hit yet. Don't ever make that mistake. So you have to win the battle of the spending. The worker dilemma is that you make all your money with your time, and it's how you make the money. And it's not easy to make the kind of money you make without laboring, without putting in the stress and the sacrifice and the effort. You don't get paid 3, 4, 500,000 and not work for it. And if you want to have any sort of autonomy, because how I define financial freedom is not retiring at 65. That's the old economy. That's living off a pension, working at the same company for 30 or 40 years, collecting Social Security. The new economy forces you to produce. And the way companies incentivize now is not through tenure. It shifted to performance. Pension obligations were high for the companies. It cost way too much money. And so they shifted to a more flexible, more performance-based route where they started giving equity. So now you're in a situation where you get equity grants and you're almost a default into a investor. You've gone from a worker where you're still making a salary and bonus to now you're managing equity and you're trying to optimize that. And so by default, now you've become an investor. So if you want to start to level up, because level 1 is a closed ecosystem, you have the comfort of the floor and you have the restriction of a ceiling. So it's a closed ecosystem. The biggest benefit that you have is you have what you do best, which is your earning power and your human capital, your experience, likes, dislikes, things that you're good at within level 1. So this framework is not without its drawbacks, is that the framework is flexible, but it's real, is that you cannot expect to make more money if that's not the reality in level 1. Worker tax is something that you're gonna have to pay. It's tough to swallow because you're paying 50, 40, 30%, right? Depending on the state. So Fed, state, FICA, and you pay it right away. So you make the money, you get taxed right away, and then you spend it. So if you spend it all and you go on credit, that's the loop that you're in. You're gonna be in a really hard spot. You're not going to be free. That's not autonomy. That's like the inverse of that. So to get out of this closed ecosystem, make more, spend less, ideally make more, but reality is you have to spend less. You have to stop spending money on stupid shit. You have to be better than a good worker, and you have to convert that into the savings. So level 2 is where you become a saver, and that is the rate at which you save 5, 10, 15, 20, 30%. The other component of that, it lands in a savings account. And a savings account could be a checking, savings, CDs, money markets, anything cash equivalent. Now, it's a false sense of security because it's nice that you have additional savings, you're not living paycheck to paycheck, but it's just sitting there. It's a risk-free rate. So if you're not taking on any risk, that's going to be the associated rate of return, 3-4%. Now, what's inflation? 3, 4? So you've lost the game before it's even started. So the battle then becomes, you can't have too much savings that's running idle. It's just sitting there, earning nothing. You have to do something with that. So you have to convert that into your asset base. To go from level 2 to level 3, you have to take on this uncertainty. And so you lack the control. Most plans stop right here. Level 1 is a budget. Level 1 is spending. Level 1 is the comfort knowing that you're a high income earner and you can spend and spend and spend because the plan supports it. You can afford whatever you want. You can buy the car, you can buy the house, you can start the business in level 1. In level 2, you have a savings account and your cash reserve and everything is fine and dandy. And I would probably imagine that within that same level 2, you probably have 6 months worth of expenses, you're feeling pretty good about that, and so you stay put. You're not really thinking anything at this point. The plan allows you to check the boxes. As you start to shift a little bit into level 3, you have a 401k plan and you just start plowing money into your 401k, maxing that out. But you've done that. You also might own a house as you go from level 2 to level 3. And you've plugged yourself into a system and the home is paying some sort of a capital gain. You're making some money there. You're getting some write-offs. But ultimately, it's money out of your pocket for the house. For the 401k, you're limited because now you're age 60 and that's when you can get the money. The house is not liquid. There's no liquidity with the house. So you're stuck, right? You're not going to get any sort of a gain that you're realizing until you sell it or you borrow against it. But there's also some limitations there. So if you're a worker and you're a high income earner and you're underinvested, high income underinvested, the house and the 401k is your primary source of the asset base. This is supported in the plan. These are the check marks that you check off, the flight path of most people. This is antiquated thinking. This is go to school, get a job, climb the corporate ladder, save 3 to 6 months of cash reserve, max out my 401k, and buy a house. Then what? If you've checked all those boxes, that's typically when I find the traditional planner or the traditional advice stops. That's where it stops. But that's where you can't stop because you are stuck in level 1 and level 2 and you're not leveling up to where the wealthy people are playing the game. The playing field is level 3. The playing field for most people is a worker and not investor. It's very difficult to get the autonomy because the assets and the freedom is more of a function of your time, the timing of these things and how these assets are growing and what these assets are actually giving you. What is the resource of owning these assets? So if I check all those boxes, then what? Am I going to pay off my mortgage faster? Am I going to put more money into a 401k? Am I going to have more savings? This is the conversations that I have with you. These are the conversations that I have week in and week out, because there is a limit of knowledge and mindset and intuition that can get you over the hurdle, because the hurdle is so high. The way that you're built and the way the new economy is set up, the only way you get there is to get to level 3. Now, the asset base that gets represented, if you go from level 2 to level 3 and converting money into the asset base, then it goes back to what is your personal story and what's your money making thing. And everybody gets caught up in the output, like the AI stock I should have been buying. Hear that all the time. Or the crypto, the house flipping game, owning 30 houses. I should start a business like a toilet paper business and try to bank on that. But if that's not suited to what you do and what you know best, then that's not going to work for you and me. So you have to choose an asset. What's the effort and sacrifice that you have to put into this asset? Is it truly passive, right? Because I'm looking at passive income, money without my time that needs to be generated from these assets, whether it's rent or a dividend, income from a business that I'm not working in all the time, or some sort of capital gain of the underlying asset. It has to be one of those things. So if that's not the case, because if it's not passive, then it's not doing me any good. So if I look at juice worth the squeeze, everybody's like focused on how much return there is, right? Just like the losing weight. Everybody's losing the 50, 40, 30 pounds, the output. But what's the input to get there? I mean, I like the Ozempic because there's no time and effort. The time delay is very quick. I'm going to get the result fast. And the effort and sacrifice that I have to put in that is much different than me going to the gym every day, or the meal plan that I don't want, or the diet that I don't want to stick to. It's human nature. If I'm going to go and have 30 properties, flip houses, if I'm going to start a business, like how much time and effort is that going to take? Time meaning how long is that going to take for that to get the result? And then how much effort and sacrifice do I have to put in the thing? If I have to, for example, go and get the money, if I have to go get the money versus earn it passively. Everybody has their number, but I have mine. For example, let's say that I can make 30 grand, but I would have to go live in Florida for a month, and I would have to go to work day in, day out. Now, I had to go there for a month to make it. So there was an effort and sacrifice, right? I knew the money was going to be made, but I had to go get it. Now, if I'm thinking like an investor, I'm thinking more of how do I do this passively? So if I were to make something less juice, let's say, so instead of the 30, I was paid 15,000, but I didn't have to go anywhere. I could just stay local, and I could just stay in my current environment and doing my day-to-day, and I could make 15. Or I could make 10 not doing anything at all. And so then that becomes the mindset shift. It's the lens at which I view it now. It's not necessarily the money or the juice. I have a desired outcome and there's a risk associated with it. It might not work out. A business or an AI stock or something that's uncertain in level 3 as the underlying asset, it might not work out. But I know for sure, effort, sacrifice, I don't want to have to put any more time. It's how I make my money. And so that's just a little bit of a background on how I think about it. Now, I do not personally own any 401k money or any IRA money. I don't deploy any of my capital into those types of features. It's more of a feature. It's a wrapper that goes around the account. They give you tax deferred, tax free, and gives you some tax benefits, but it's not available till 60. So there's no liquidity, very limited. So if I want to be free before 60, I'm kind of out. And the next thing it doesn't have is that it doesn't have access to leverage that gives me more buying power. So the game for an investor shifts from a worker, which is earning power, to buying power. As a level 3 investor now, I've leveled up to a point where I can leverage my assets, and I'm using them now as buying power. I'm taking out collateral, just like I would with a house. If I apply for a home equity line of credit, I use the house as collateral, I borrow, let's say it's 100,000. Now, do I pay tax on the 100,000 that I took out? No. I do not. I pay it back over time because I have to service the loan, but I don't pay any tax on the loan itself. So I was able to get access to capital because I had collateral and it was liquid. I had to apply for the loan and then I got the loan. This is the same game with a non-qualified brokerage account, non-retirement account that's set up. Brokerage account with an asset base at a certain amount will give you access to leverage. Now, if I take out leverage, which is a margin loan, I don't pay tax on it. I have to service the interest on the loan. I have to apply for it. But as long as I have the assets in the account, they use that as collateral, then I don't have to sell anything. I keep the house intact. When I did the home equity line of credit, I have to sell the house, right? I kept the house. It's still going up with appreciation. If it goes up or down, I have access to that because I didn't disrupt it. Same thing with the portfolio and the non-qualified account. I didn't sell anything. I'm not triggering any tax. I'm just using it as collateral. I'm taking the loan out, and now I can use the loan for whatever I want. I can buy more assets with it, buying power. I can go fix my rental roof move if I need it. Take the loan out. I don't have to disrupt. I don't have to take it out of my cash flow. Worker tax, right? I'm paying income. I get taxed at the highest amount with my income. Let's just take what I have, my collateral, borrow against it, and then pay that. If I want to go buy a rental property at the right time, I can just leverage my collateral. This is the game that the wealthy people play. It's based on a strategy. It's a winning strategy, but you have to have the asset base to do it. It has to be liquid. It has to give you access to resources, passive income, leverage, investor tax, not worker tax. If you're in level 1, you will always be forced to pay worker tax. You're not taking on any risk. It's a closed ecosystem for a reason. When I open up a business, I get incentives. I have a lot of tax write-offs as a business owner. There's uncertainty with that. Same thing with an investor. There's uncertainty with that. That's why I have certain tax benefits. That's why I'm able to access collateral, because there is uncertainty to that. But you have to have a system. You have to have a framework to fall back on, because nothing is for certain. You see how the markets behave. You see the ups and downs and the nature there with that. It is a very difficult game, and you need somebody to navigate that with you. If you're in level 1, level 2, the plan works just fine. But if you really want to level up and you want to have the autonomy and the control and the different optionality that you have available to you as a high income earner with a lot of stress and a lot of things that you want to do in your life, then you have to have the asset base. The bigger the asset base, the bigger the freedom, but you have to take some shots. You have to take some bets, and you have to be with somebody that's on your same wavelength. And the question is, are you with the right advisor?